Really appreciate it. We want to add now another big voice to this conversation. Joining me is Michael Saylor. He is co-founder and executive chair of MicroStrategy. Of course, MicroStrategy, often seen as a Bitcoin proxy, it holds a lot of it on its balance sheet. Michael, great to see you. Thank you so much for joining us. Obviously, there has been so much anticipation and frankly, a lot built in, I think, to the price of Bitcoin of this idea that spot ETFs are finally going to come. What's the next catalyst for Bitcoin if and when that happens? How much further can it be pushed upward?
Well, I think you can't really underestimate the significance of the spot ETFs. It's not unreasonable to suggest that this may be the biggest development on Wall Street in 30 years. I mean, the last thing that was this consequential was the creation of the S&P index and the ability to invest in all 500 S&P companies via one trade at the same time. So this is very eagerly anticipated, but most of the money in the Bitcoin market right now is the hodlers and the traditional crypto investors. Mainstream investors, mainstream retail, mainstream institutions have not had a high bandwidth compliant channel to invest in this asset class until these spot ETFs. So I think in January, the approval of the spot ETFs is going to be a major catalyst that's going to definitely drive a demand shock. And then that will be followed in April with a supply shock because there are about 900 Bitcoin a day available for sale by natural sellers, the miners. And that number is going to be cut to 450 Bitcoin a day in April. So it's a pretty big deal.
And that puts Bitcoin where a year from now?
Higher.
How much?
We could probably keep a bunch of economists and modelers working all day long to calculate the supply, demand, and price elasticity of this. I don't think we've ever seen, a 2 to 10x increase in demand combined with a halving in supply in a scarce, desirable asset that people want to hold for a long period of time. So I think we're expecting 2024 is going to be a major bull run for the asset class. We just don't know how far the asset's going to run at this point.
Well, and to get to MicroStrategy specifically, as I said, obviously a big holder of Bitcoin, given what you just told me about how a spot ETF is going to make it perhaps easier, more appetizing for retail investors, institutionals to get crypto exposure via that product, why would someone still need to be a buyer of MicroStrategy? Is this actually something that is going to end up working against you?
The ETFs are unlevered and they charge a fee. MicroStrategy is an operating company, so we're fairly unique because we can generate additional Bitcoin via our operations, either via P&L operations or capital markets operations. And we can take advantage of intelligent leverage. Like we can borrow money at 0% interest for many, many years. And we did that with the convert, and then we can use it to buy Bitcoin. So you can really think of the ETFs as like shipping lines, very efficient, long haul, carry a lot of capital. MicroStrategy is more like an airline. We don't have the cargo capacity in our capital structure that a container ship has, but we can go faster and we have higher performance. So we provide you leverage and we don't charge a fee. And so if you can dig into our capital structure, you get comfortable with that. We offer sort of a high performance vehicle for people that are Bitcoin long investors.
Well, if it is ultimately for people who want to be long Bitcoin, and we are seeing Bitcoin, as you anticipate, continually be pushed upward by some of these developments in 2024, what does that mean for your plans around holding, and whether there are entry points at which you would want to buy more, perhaps not?
Well, we will absolutely continue to acquire Bitcoin. Our strategy is to acquire and hold the Bitcoin, and we will acquire it by a variety of different means as long as they're accretive to our shareholders. So our goal is always to find a way to pursue more Bitcoin per share for our shareholders. And sometimes we do it with debt, sometimes we'll do it with equity, sometimes we'll do it with cash flows from the business. And of course, the volatility in the market just creates more opportunities for us as an operating company. And our particular business strategy allows us to harvest that volatility to the benefit of our shareholders.
Well, and let's talk about how you account for that as well, because obviously last week, the Financial Accounting Standards Board passed new rules that will apply to MicroStrategy. Essentially means you get to capture all the highs and the lows of your cryptocurrency holdings. Technically, that doesn't actually go into effect until 2025, but you could adopt it earlier. When is MicroStrategy planning to do that?
Well, we're still evaluating that, and I leave that decision to our finance people. But what I'll say about the accounting is, I think fair value accounting is a giant step forward for the industry. And up until now, corporations have had to invest all of their spare treasury reserves in sovereign debt. Sovereign debt normally has a compound annual growth rate of a few percent. The cost of capital for most companies is 10 to 12%. Bitcoin's got a compound annual growth rate of 40+% over the past 4 years, and even higher in the more distant past. So having a digital money like Bitcoin as a treasury reserve asset allows you to beat the cost of capital, and it turns your balance sheet into an asset instead of a liability. So we think this is a real game changer for corporations.
So do you think then that it could be advantageous for MicroStrategy to potentially use these accounting practices earlier rather than later?
I think that we'll wait for our finance people to give us that recommendation. I do think that the fair value accounting guidelines from FASB are just going to be good for the industry in general. They'll provide more transparency, and they'll be good for Bitcoin as an asset class and for Bitcoin as a treasury reserve asset for companies that have large cash flows that they want to carry forward.
All right, Michael Saylor, we got to leave it there. But thank you so much for joining us. Hope to have you back in the new year, and a very happy new year to you. That's Michael Saylor of MicroStrategy. Now, coming up, we're going to talk a little bit more about pricing, where Bitcoin could be heading in 2024. Crypto author and analyst Noelle Acheson will join us to discuss also transaction fees and what's next for altcoins. That was Fred Thiel, Marathon Digital CEO, speaking to Bloomberg in the last couple of days. Joining us now for more is Noelle Acheson. She is author of the newsletter Crypto is Macro Now. Noelle, great to see you for a final show of 2023. And it's been a really big year for Bitcoin. He just suggested that this idea of a spot ETF is about 90% priced in to the market at this point. I look at the start of the year when we were south of $17,000. June, pre-BlackRock ETF filing, we were around $24,000. Now we're at 42. And I just wonder how much further realistically you think that has room to go.
I would say a lot more than that, Kelly. I do not think it is 90% priced in, because crypto markets are not efficient. I would say perhaps it's 90% priced in from those that follow this market very closely on a daily basis. But that's not the majority of investors. And that overlooks the educational impact that the launch of a spot Bitcoin ETF will have. Suddenly you have big name issuers reaching out to their vast client databases to talk about Bitcoin. You have RIAs around the United States reaching out to their clients to talk about Bitcoin. So is it priced in? No, I would say not even close. So does that mean that we can put a value on what Bitcoin could get to? No, it doesn't, because Bitcoin doesn't, as you know, have fundamentals that we can value with any established model. It is very much supply and demand. The demand part is what we have yet to see play out.
Yeah, I'm struggling to get answers on actual price level this show. Michael Saylor of MicroStrategy didn't really want to answer that question either. So if we aren't talking about pricing, but more the role that this potentially could play in a portfolio, how much of this is about it being seen differently from an investment thesis point of view?
It's about Bitcoin not just being a speculative asset anymore. Obviously, the initial ETFs will perhaps be seen as speculative vehicles for those that want exposure to Bitcoin's volatility. But I do think, Kelly, that we'll see over the course of 2024, other ETFs start to put spot Bitcoin in their mix, either via the existing spot Bitcoin ETFs or maybe even directly. Bitcoin will go from being a standalone speculative asset to being a portfolio alternative, a portfolio diversifier, if you will. And that gives it a much more stable position in the investing landscape for a much broader range of investors. And the potential inflows into the ecosystem from that slight narrative shift are potentially enormous.
So that's for Bitcoin, obviously, specifically. What does that mean for all of the other coins out there? Is that where all the oxygen is going to go and leaves a lot of these altcoins in the dust?
The oxygen will right now, for now anyway, continue to go to Bitcoin, in my opinion. It is still a Bitcoin-led market. Sure, we're seeing Solana up 660% so far this year. Avalanche is up almost 300%. And I'm sure you've seen some tokens called Bonk and other really strange things bouncing around. We are seeing the revival of meme tokens, but most of that action is still being driven by crypto natives and perhaps by some mainstream investors as well. But we're not yet seeing the rotation, but the significant rotation from Bitcoin into some of the altcoins. Bitcoin dominance is a metric worth following. That just simply measures the Bitcoin market cap as a percentage of the total crypto market cap. And it is now around 54%, which is the highest it's been since April 2021. At the start of this year, Kaylee, it was at 40%. So as that continues to go up, that is Bitcoin sucking in new investment and increasing its dominance of the crypto market. When we start to see that turn, when we see Bitcoin dominance start to come down, that will know sentiment is shifting further out the risk curve, and that will be a new phase of the market.
Okay, so Noelle, you say Bitcoin dominance is going up. Transaction fees are going up too, and this is something you flagged to us. What does that mean for the outlook? Why is that significant?
Well, transaction fees are surging, Kaylee. You're so right to point that out. I mean, just even smoothing a bit to take out some of the day-to-day fluctuations over the past 7 days. The average transaction fee on moving Bitcoin is over $25. And this is important. This is both good news and bad news. The bad news is that it impacts Bitcoin's potential utility. It's not exactly going to be used for small payments. And of course, there are many who will tell you it's not being used for that anyway. And I guess that's fair. They could also keep some retail investors on the sidelines, because you're not going to take a $25 position in Bitcoin if you have to pay $25 transaction fee. This doesn't make a lot of sense. But overall, it is actually good news for Bitcoin because it helps with miner profitability. They are earning a lot more on transaction fees than they have in recent history. And this matters because more profitable miners means more miners, and that is good for Bitcoin network security. And this is especially relevant given the halving that you've just been talking about on this show. It's also good in that it's more profitable miners, Kaylee, means that miners are not quite as pressured to sell the Bitcoin that they mine. That means less sell pressure coming into the market.